watching famous games on YouTube.
All right, and welcome back. We are on kind of what I would call sort of a wartime situation here as far as trading and especially the VIX goes. And I have to imagine that it's been kind of a rough go for quote unquote pro VIX traders out there because basically the rules are a little bit different now, seeing as we are in an extended type of spike period. The term structure has been inverted in backwardation for some time now, and I'll kind of show you what I mean here. Let's just take a look first at the VIX term structure. I'm going to get to my position in GameStop and other thoughts in a little bit, but let's first take a look at the VIX here and see what we've got going on as far as the term structure goes, because it really the normal way that we want to go ahead and trade UVXY or VXX really is we have to be a little more careful at this moment in time. And I can see behind me here this VIX Center wanting to feed me some commercials, as it likes to do now. Let's see. Skip. I don't want a quiz. I just want to look at. Here we go. All right, and let me get out of the way here. Now, if we look at the term structure, we can see that we are inverted. That being, the futures are at a lower prices than the actual VIX here. Remember, we are delayed by like 15 minutes, but you can see the future is going out in time, are downward sloping, thus we're in backwardation. And I've seen a lot of confusion online about this. Let's just remember, first of all, that backwardation and contango are long-term effects. They're stuff that happens over a long period of time. And for the most part, backwardation generally only lasts for, 24 hours. And so its effects of actually kind of the ETF drifting higher based on backwardation is generally going to be moot, because backwardation generally only happens when we are in the middle of a spike and UVXY is way up, and us coming off the risk at that moment when we're in backwardation is far greater that stuff is going to move back to the downside, because we are in the middle of a spike, and spikes generally don't last very long, and when spikes are over, stuff goes way back down. So the risk, when on one hand you've got backwardation, which is slowly pulling the ETF higher, and on the other hand you've got the fact that we're in a huge spike and we're expecting a big down move at any moment. And so the danger of that down move happening at any moment, or the effects of that down move happening at any moment, far outweigh the slow adjustment of this drift higher due to backwardation. So, but the point here that I'm making today is that we've been in backwardation for a period of time now of, I'd say, over a week, and this can continue for a while. So, usually you hear me come on here and say, oh, well, a spike only lasts 24 hours usually. Well, we're long past that now, right? It's been longer than 24 hours. Now, the likelihood is that we're going to come off of this spike more than we're going to stay on it, but playing for a move today, quick move to the downside, the odds here of that happening are a little bit less now that we've been in this spike for a while. And let's face it, when we're trading, we're talking about an odds game. Yes, people will come on and say, well, I'm going to stay long, I'm going to be long volatility because we could go way higher. But the odds, generally most of the time, are that we're not going to spike higher, right? It can happen. It certainly can happen. And this is an outlier where we are in a spike for an extended period of time. So it does happen, but the odds are not for that to happen. The odds are for the market to slowly rally, because that's what the market does most of the time, is it slowly rallies. We stay in contango most of the time, and the VIX products go down most of the time. So if you want to win over the long term in the market, you need to stick with the odds. This is a concept that has eluded all those people that play the lottery and scratch tickets. I just actually had somebody 2 days ago try to convince me that the laws of probability don't apply to them. That's what someone is trying to sell when they tell you that they consistently win at scratch tickets. They're trying to say the laws of mathematics don't apply to me. They apply to everyone else, but they don't apply to me. It's kind of like saying, I'm going to jump off a cliff, and the laws of physics won't apply to me. I'm going to, instead of falling to the ground, I'll be able to fly up in the air. And certainly there is, a very remote possibility that some huge wind gust might come that would make you fly up for a couple seconds. But it's hard to escape the laws of mathematics. And certainly when we talk about probabilities, we talk about the number of instances, right? So if you're playing basketball against, Michael Jordan, you could possibly win once against him one-on-one going down the court, right? But if you play 20 games with him, he's going to end up winning. And it's the same with probability and statistics. Somebody could walk into a gas station, buy one scratch ticket, and be up money. But if you come into a gas station 1,000 times and buy a scratch ticket, your expected return is going to get closer and closer to the actual odds. That's the way probability works. The more instances, the closer to the actual odds your returns are going to be. And thus, this is a long roundabout way of saying that somehow playing for making money off backwardation is not going to be a successful strategy for anybody. But now that we're in this spike situation, doing stuff like buying puts that are going to expire in 2 days in UVXY, it's harder to make the case for that kind of trade, because we could stay in this situation for an extended period of time. It's already been a little while. Let's take a quick look at the chart of UVXY here. And the other point I want to make quickly with not UVXY but all stocks is that there has been room to play on to the upside and the downside in a lot of these issues. We get a news story comes out of Ukraine and we rally. A news story comes out, we sell off. So anybody who's in there with any sort of position, if you got short, a day we go down, you buy a little bit of Tesla because we're way down. The next day when we rally back, you can make money off that trade. Conversely, we're up a day, you sell a little Tesla, the next day we're down, you can make a little money off that, right? Just Tesla itself, let's take a look at the chart of that one. And I'm going to come back to UVXY right now, but it looked like the end of the world for this stock for last week. We got down, it looks like below 700 after getting as high as 1250 here. And it looked like the end of the world. And look, it just popped right back. And indeed, I was talking in the chat room for options traders about how when we were down here around 700, I was saying I'm not brave enough to actually go ahead and buy Tesla down here through buying like Leap's calls or something. But if I knew it was a good trade to buy it down here, because it seems like it always comes back and moves higher. Of course, until it doesn't. So let me get back to looking at UVXY here. So UVXY got as low as I think 12 something. Oh no, 11.16 here, right? And let me get out of the way here. 11.16, and but since that would be around January 10th, but since then, look at this. Look at these moves. It's just been all over the place, and there's two-way trade in here. You can make money the upside and the downside, but look at the trend since February 17th is higher in UVXY. Now, you're going to see, if you look in the chats, you're going to see all these people saying next stop 1,000, blah, blah, blah. The reason people say that is because a lot of the newer folks on here are going to apply the same theories that they've heard about Bitcoin or meme stocks. They're going to apply it to everything, right? They're just going to blanket say, doesn't matter what it is, these three letters go into the moon, short squeeze, blah, blah, blah. None of that applies to a VIX ETP. This is mathematically predetermined to move lower. So, yeah, this is an anomaly here when it's moving higher, and things are, the world isn't going to just turn on its head, and this is going to move higher from now on. The numerically speaking, the lowest the market can go is 0. The highest the market can go is infinity. So, because of that, just that alone guarantees that these products have to go lower over time, because you can't have increased volatility forever, because eventually these the underlying that this is based on, that being the SPX, does reach 0, and at that point volatility does come off, right? There's a lower boundary, so it can sell off for a while, but at some point it rallies again, and then volatility comes in, and we move back into contango, and this starts to decay again. So that's an extreme way of looking at things, but it just illustrates the fact that this will move lower. The other evidence that this will move lower is just look at a 3-year chart. Look at that. You can see moving lower. Let's go to a 1-year chart of this. But right now we want to be careful because we've moved sideways to up, right, since January, right? Now there is an opportunity to make money on these little moves. You can get short, ride it down $2. You can get long, ride it up $2. There's opportunity in this marketplace. There's fear about the war. Fear breeds opportunity, because when people panic, there's a chance for us to make money out there, right? So there's opportunity big time in this market. A lot of people, as soon as they hear war, cover their positions, right? Volatility goes up across the market. That means for those of us who do want to take some risk and sell some options, we can sell them at higher prices than we could before this whole war thing started. Now, am I advocating that you take some certain position, that you get short volatility or you get short certain options? No. You're going to have to decide that for yourself. It's funny with this whole meme stock thing. I was short GameStop for 6 months, and I eventually did very well in that. However, I was the bad guy on these forums because everybody was long. It was a big thing with these meme stocks. These new traders, they came in, they bought a couple names, and the names went up. And so now all of a sudden they're committed, and they just love the idea of being long something because they made money for a little while with that particular trade on. And, I was the enemy in all these forums. And just the fact that the word short is in my profile, it says short vol show. People don't get past the short. They just think, oh, there's a word short, so he must be advocating being short these stocks. Thus, he's our enemy. So anything I wrote online was just attacked mercilessly for a while, which doesn't bother me at all. I'm not here for a popularity contest. For me, my priority is making money, trading, and secondarily, my channel here to educate people. And so, once again, to get back to my point, I'm not advocating that you do any specific thing or that you follow my trades in any way. I'm just showing you online what I happen to be doing at the moment. And I'm a firm believer in the fact that to be successful as a trader, you need to come up with your own ideas and execute them. Following me or anybody else is not going to work. And, that's just kind of the way it is. And there are many people out there who want to follow somebody. And a classic example is somebody who has been successful in another industry. Take, I don't know, a doctor, a lawyer, a dentist. You've been successful in another industry. You come into the finance industry and you've got money. So you say, well, I've got money. How can I buy my way to have an edge here? And so they'll try to find somebody who can either teach them or tell them what to do. And a lot of the reason behind this in the end is people don't like the idea of uncertainty and putting risk on and not knowing what's going to happen. And this uncertainty, having risk on, and waking up in the middle of the night sweating and saying, oh no, I have risk on. If it goes against me, it's going to be really bad. That feeling of fear and uncertainty of having risk on is something that we're not born as humans to be accustomed to. It's something that you have to get used to and develop. And there's really no way around that feeling if you're going to be successful as a trader. You're going to have to put risk on, and it's not going to feel good, and you're going to have to sit with that risk on for extended periods of time. And you're going to have to sit with the uncertainty of thinking in your mind, well, maybe I should have the opposite position on. Maybe I did it all wrong. And it's a tough thing, because if you have a position on, you lose money. If you share too much with those around you, your loved ones, your wife, girlfriend, whatever, and you put trades on, you lose money, then the criticism is going to come back at you. Oh, trading is just gambling. You're you're wasting your time. And I got it from my family when I first started trading. My parents wanted me to be a doctor or something, just like every parent does, right? And putting risk on, if you lose money, you're attacked from all angles. It's just, and you don't have money. And if you make money, generally nobody wants to hear about it, because who cares if someone else makes money? Either that, or people approach you in the street and want to say, they come up to you and say, hey, if I give you $2,000, can you make me some money? And that's happens all the time to me and to other traders. And there's really not a way that you can translate that. Or people ask for advice, what's a hot stock? And it doesn't really work that way, once again. Certainly you could have a backer who puts $1 million in your account and allows you to trade a little bit bigger size, but a backer who's willing to do that will understand the risks involved. There's no way to make money trading unless you take risk. And the average person who comes up to you, who doesn't know about the market and who wants to hand you $2,000, doesn't want to take risk. They want you to somehow guarantee to them that they're going to make money. They hear these people bragging, oh, I put $3,000 in the market and it became $30,000 in a month, and they want to duplicate that kind of thing, and it's not easy. Trading is not easy. It's hard, which is not a great message when you're trying to grow a YouTube channel, but it is what it is. What can you do? Anyway, so we are in a war zone. All right, so let me just go back to my GameStop position and show you what I'm doing right now, and then I'm going to end this. So GameStop's been kind of sitting around the 120 strike for a little while. If you look at the chart, though, over the last couple years, it's been all over the place. It's not destined to sit here, right? It's going to move. It has always moved, but if you just look for the last couple weeks, it's been sitting at one spot. You can see just kind of flat around this 120 since this 8th of February. And remarkably, when the market has sold off during the war, it has bounced back to this 120 strike. You can see here way down, then bounce back to the 120 strike. Now, I have been having a calendar spread on where I bought May and June puts and sold similar strikes in the front weeks. And it's essentially a bet that we're going to stick at the 120 strike. And I really haven't made a lot of money on it because I keep trading in and out of it. So you kind of, when you have a position where you're short options, you kind of have to leave it and just let it do its thing. If you trade in and out of it too much, you sacrifice, because the markets are kind of wide here, and even if you try to trade stuff mid-market, it's hard to value stuff when you're buying far out months and the screens and the markets are really wide. It's hard to value stuff, and if volatility comes in a little bit in the back months, which you're long, that's going to wipe out a couple days decay. Now, if you just look at the raw numbers here of the Greeks for this position, you can see, collecting 1,000 a day. That sounds great, right? Delta here, very flat. I'm short 31 deltas here. Gamma short 17. That means that each dollar this moves, my deltas are going to move against me by 17. So essentially, up a buck, I'm no longer going to be short 31. I'm going to be short 31 plus 17. So that's 48. Up another buck, I'm going to be short 48 plus 17. And so forth. And the same to the downside. You can see the risk doesn't look too bad for a 10% move here. Let's reset this. For a 10% move here, down 10%. All of a sudden, I'm long 200 deltas, and I'm losing 1,100. Up 10%, I'm short 200 deltas. I'm losing 1,600. Now, to lose 1,600 for a 10% move when you're collecting 1,000 a day it seems like reasonable. It seems reasonable, right? And indeed, here you can see a chart of P&L and showing that if we stick at this one spot, I'll make money. This is the break even. Break even for today is I make money between 111 and change and 130 and change. Break even through expiration is a little bit wider. And you can see if it just sits here and I do nothing, I can collect a bunch of money. No way of knowing if we'll sit here or not. And I can show you the actual position here if you want to take a look. You could screenshot it if you're really interested. There you go. So that's kind of where we're sitting. Now, I know there's a contingency out there that would say, you're crazy to have risk on during this war. The market could go way down or it could go way up. And the thing is that I go back to what I was saying before. You can't make money unless you put risk on. And that's just the way it is. It's the way of the world. Just to recap once again, I had the best month that I've had in years in January, and fortunately I haven't given it back, which is great. But I've basically just flatlined all of February. I really haven't made or lost any money, and the reason for that. A lot of the reason for that is, first of all, I was smart enough. I was short GameStop for 6 months, but I was smart enough to switch gears and realize that 100 was a big number for the stock, and that it was going to and to make to adjust and say I'm no longer going to be short this. And indeed, when you look at my delta there, short 37, I'm now flat the stock and kind of making the bet that it kind of sticks around this 100 area, more like the 120 area, for a little bit now. And being able to switch gears was a big deal for me. I would have got killed if I just stayed short, because we got as low as, I think, 87, and then we rallied all the way back to 130. So that would have wiped out most of my profits if I'd stayed short. So proud of the fact that I've held on to what I made, which was the account going up almost 100% in January, but struggling to add to it currently. I like the position I have on, but it's been hard for me to sit there and not adjust as we move back and forth every day. If I just left the position I had on, if you look at the chart behind me, if I just left the position I had on for a couple weeks, then I would have done great. But I kept, I'd made $500 and I'd take it off, or I lose $500, I'd take it off instead of just leaving it. And when we had this big down move this day here, I took the position off because I got spooked. So sometimes you have to commit, and committing means that you're not going to adjust, you're not going to get spooked, you're going to just leave it. And it's a hard thing, once again, trading. So that's kind of me talking about stuff for a little bit. I appreciate people watching and coming on. And that's it for me for today. I will see you very soon, and thanks for watching as we approach the open today with the market essentially pretty unched right now. E-minis down 10, VIX up 80.85, and UVXY somewhere around 18. I'll check to you next time. Thanks for watching.